So the Marshall Fire, as most people know who live in Colorado, that was the worst natural disaster in the state history. Over 1,000 structures were burned, mostly homes, and it happened in a suburban setting, which is not common when it comes to wildfires. So some of the areas where most people found themselves to be uninsured, the first one being their reconstruction costs, and in addition to that, their extended replacement costs. This Marshall Fire, it happened kind of in the height of inflation and building materials just going through the roof, scarcity of labor, where to rebuild a house was going to cost significantly more than the insurance company had predicted. Now, that was the first area where people found themselves underinsured. The second one is additional living expenses. So in Colorado, your homeowner policy is mandated to have 12 months of additional living expenses. So what that means is if you have a claim and the claim prevents you from being able to live in your house, this money, this coverage will pay for you to live somewhere else for a period of time. Well, 12 months, if your house burns down in Colorado, that's just not enough time. The Marshall Fire was more than 18 months ago. And I think only 2 or 3 homes of the 1,000 have been rebuilt. So anybody who only had the minimum coverage as required by state law of 12 months, they ran out of additional living expenses a long time ago. And one thing that people don't realize is that if your house burns down, you still owe money to the bank. You still have to continue paying a mortgage and live somewhere else. So additional living expenses is so important on a home policy. And then the third one is ordinance and law. Now, with the Marshall Fire, that happened in Boulder County, and they have a lot of very strict building code laws when it comes to rebuilding houses. Your insurance, your home insurance, is only required to rebuild your house back to the way it was prior to when it burned down. So if your house was built in, say, the year 2000, it's not up to current building codes because we have state, federal, county, city building code changes that happen every single year. So if you're living in a 20-year-old house, there's a high probability that your house is not up to current building codes. So if your house burns down and you have to rebuild it, now you have to put in all the additional money to bring it up to current building code. And that was another area we saw a lot of people uninsured or underinsured with the Marshall Fires. In closing, when it comes to what we learned from the Marshall Fires, I would just recommend that you talk to your insurance company and you make sure that you have the maximum amount of extended replacement costs that they offer. And if they offer guaranteed replacement costs, I would ask them for guaranteed replacement costs. I would select no less than 2 years of additional living expenses. Some companies, that's the maximum they'll offer, but every company I'm aware of will at least go up to 2 years. And then the third thing is select an amount of ordinance and law that is adequate for your house. So the older your house gets, the more ordinance and law coverage you need. We have many companies that don't cap ordinance and law. Most home companies come with 10% of your dwelling coverage for ordinance and law. And at least from the Marshall Fire, that probably wasn't enough. So I would look at 20 to 30% on the low end and then talk to your insurance agent or a local builder to try to come up with a better idea beyond that.